Starting off with the office market, Gillian will give us an overview of the vacancy data, and then Ken will run us through the Q1 2022 status, the market trends, and then the opportunities for tenants.
Okay, thanks, Ed. Starting with office market vacancies, we actually only saw a vacancy increase in Sydney, Melbourne and Brisbane. This is due to a number of factors. COVID has had its impacts, but Sydney and Melbourne have also had a few new developments come online over the past 2 years, which has pushed vacancy up. Organisations typically have larger footprints in these markets, so it also allows them to reduce their size easier by subleasing a floor. So we're also seeing an increase in sublease vacancy in these markets. In regards to the market seeing vacancy reductions, Perth and Adelaide still have quite high vacancy rates and remain tenant-friendly markets. Those with low rates, such as Hobart, Wellington and Christchurch, are being driven by the lack of new development. Okay, effective rents have remained stable since the last quarter, and effective rent being a face rent discounted by the incentive on offer. As we adapt to the living with COVID phase, we do expect effective rents to increase marginally across the coming quarter as we start to see a slight softening in incentives. Office occupancy levels are on the increase. The PCA occupancy stats for March saw an increase in occupancy across all markets aside from Perth, which is only just coming through its first COVID wave. Leasing activity remains strong in the sub 500 square metre mark. Given the tenant-friendly market conditions, we are seeing a trend to relocate to better quality office accommodation. Ken will now speak to the trends we are seeing.
Oh, thanks, Gillian. Thanks, Ed. What we're seeing over the last, or the first quarter of 2021 is an increase in hybrid working with the pandemic, or with the return back to the office. Many organisations have adopted this new way of working. What we are seeing also for larger organisations is consideration to a hub and spoke model, whereby they have a head office located in the CBD and smaller satellite offices in the suburbs, for instance, Parramatta, Chatswood, for those of you who are familiar with Sydney. We're also, as Gillian mentioned, there has been an increase in the flight to quality. So we are seeing a demand for premium and high A-grade options, in particular in the sub 500 square metre space. With regard to the utilisation, we are seeing organisations return back to the office two to 3 days a week, and occupancy levels around 40 to 50%. Our advice to our clients also is to adopt greater flexibility within the lease and the premises to adapt to the changes of COVID. What opportunities are out there for you as a tenant to leverage? The pandemic has created a once-in-a-lifetime opportunity to leverage these market conditions. It's also created an opportunity for many occupiers to actually reset occupancy costs. A number of strategies we have implementing for our clients involves early restructures of leases, handy back surplus space, and bringing forward incentives that actually can be utilised now. Our advice to clients who are entering into longer term leases is to negotiate favourable option term, contraction, expansions to provide greater lease flexibility throughout the term of the lease. Utilisation and transfer of risks. We're advising many clients to adopt a utilisation clauses in all leases moving forward, whereby the landlord is obligated to provide you, the tenant, with a discount or abatement in the event you are unable to utilise the premises for its intended use. An example of the transfer of risks and obligations is whereby if you're a tenant committing to a new build and the landlord has failed to deliver it by the target deadline, the risk has been transferred to the landlord and they have to, at their costs, to provide you with alternative accommodation. Other opportunities in the marketplace at the moment is actually taking advantage of critical events. We're advising our clients to review their leases to understand if there are any critical events, for instance, contraction or surrender rights that you can actually leverage in this market to reset your occupancy costs.